What's up guys? Welcome to the Momentum Trading Lab. And in this video, I'm going to explain to you step by step how to use the ICT Silver Bullet Strategy. So we are going to be discussing the strategy rules. I'm going to give you an in-depth explanation of each rule, and then we'll get into the price action for some backtesting. So before we go into a visual representation of the trade setup, let's go through the rules first. So the fair value gap that we are going to be targeting for our entry is going to form between 3 and 4 a.m., 10 to 11 a.m., and 2 to 3 p.m. New York Standard Time. We are only going to be using the 5-minute time frame. So rule number one is we are going to be waiting for a liquidity rate. So price must sweep either an old low or a high, or it must sweep relative equal highs or lows. Then we are going to be waiting for a market structure shift with displacement, and we want to see a fair value gap form inside of the displacement leg. We will be entering on that fair value gap, and for our take profit, we'll use the first opposing liquidity pool. Right, so let's first, using the TradingView drawing tools, look at how the setup will form. So first, what you want to do is just mark off 10 to 11 a.m. and then we'll be observing price action just before 10 a.m. Okay, so right here, price action formed relative equal lows. So below relative equal lows, or just below an old low, we will have sell side liquidity. Right, so if price action trades into the liquidity pool, into the sell side liquidity pool, we want to see a bullish market structure shift with displacement. So we'll be looking at the very last lower high, which will be right here. So if price action takes out this high, that will be a market structure shift. I just call it MSS for short. This is the displacement leg. And inside of this displacement leg, we want to see that fair value gap form. And this must form inside of the silver bullet time window. Right, so now we have a valid trade set up. So now we want to see price action move back into this fair value gap. Then we'll enter long and we'll take profit at the very first opposing liquidity pool. So our stop loss will be at the very last low, and we'll take profit at the buy side liquidity. So now we just wait for price action to retrace back into the fair value gap. We enter our long position. We set our TP at the very first opposing liquidity pool with our stop loss right there. So that is how the silver bullet setup looks for a potential long position. So let's look at a potential short position. So again, we want to be observing price action for that fair value gap to form inside of the silver bullet time window. Okay, so if price action forms a high or relative equal highs, so above old high or relative equal highs, we will have buy side liquidity. Right, so if price action digs into that liquidity and it displaces to the downside, takes out the previous low for the market structure shift. Right at that point where it takes out this low with displacement, that is the bearish market structure shift. We want to see the strong displacement. And inside of that displacement leg, we want to see the fair value gap form. And remember, this fair value gap must form inside of the silver bullet time window. Now we have a valid trade setup. If price retraces back into the fair value gap, we can enter short with our stop at the high, and then we will take profit at the very first opposing liquidity pool. So now if price comes back into the fair value gap, we enter short, stop above the high, and we take profit at the very first opposing liquidity pool, which will be the sell side liquidity. And that's what it looks like for a short position. All right, so now let's go have a look at some actual price action. So right here, we have price action just before the New York Open at 9:15. So we are looking to enter at around 10 a.m. to 11 a.m. So let's mark that off. Okay, so now it's just before 10 a.m. So now we have to mark off the liquidity pools. And right here we have a high, so that will be buy side liquidity. And we have a low right here for sell side liquidity. Okay, so now that we've dug into the buy side liquidity, let's see if we get a market structure shift with displacement. Okay, so right there. So we came from buy side, we got the displacement to the downside. We took out the very last higher low. So at the point when we took out this low, that was our market structure shift. And we have a fair value gap right here. Okay, this we can move to the downside a little bit because it already took out this liquidity pool. So we are potentially going to be taking profit below this low. We'll see how far it retraces now before it comes back into the fair value gap. Okay, it goes down some more. Wait for it to come back. Okay, right there, you would have been tripped in. Enter right at the start of the fair value gap. Stop right at that high. And the very first opposing liquidity pool will be below this low. This is where our take profit will be. We have a 2.4 risk to reward ratio. Let's see how this plays out. Straight to the target for almost 100 points on the NASDAQ. So that was a pretty nice silver bullet trade. Let's go to the next one. Okay, so now we are getting close to 10 o'clock. Okay, so what we want to do is we want to mark off the liquidity pools. So we are looking at the untouched liquidity pools, so the untouched highs and lows. So above this high, we have buy side liquidity. Okay, we have a low right here for sell side liquidity and another one right here. Okay, so remember the rules. We wait for price action to ride liquidity. Then it's a market structure shift with displacement. Inside of the displacement leg, we want to see that fair value gap form. Then we enter in the fair value gap and we TP at the first opposing liquidity pool. Right, so right before 10 a.m. Okay, so we came into sell side liquidity. So let's see if we are going to displace to the upside, starting to move up. Okay, so we took sell side, taking out that high. So that is our market structure shift. Buy side will build up a little bit higher. Okay, so we took out sell side. We started to displace to the upside. We created a fair value gap. We have a potential long position. If price action comes back into the fair value gap, and we'll take profit at the first opposing liquidity pool. Let's say see where the liquidity builds up, going up a little more. Okay, so at this point, we are not now tripped in. Liquidity pool is right here. So this is your decision. So normally I like to target at least a 2-to-1 risk to reward ratio. This one only offered a 1.4. Let's see if it goes to the profit, take profit area. Right there, it eventually gets there for a potential 98 points. All right, let's go to the next one. Okay, so we are just before 10 a.m. So we want to be marking off the 10 to 11 a.m. time window. We also want to be marking off the liquidity pools. So above this high, we have untouched buy side liquidity. And below this low that is printing right now, we have untouched sell side liquidity. One thing to take note of is that we already came from sell side liquidity as well below this low. So let's just fill that in so we are aware of that. Okay, let's see what happens. Okay, so we're digging into the sell side liquidity. So are we going to be seeing a market structure shift and displacement to the upside? Okay, so we're displacing above an old high. So we definitely have a bullish market structure shift. Fair value gap formed inside of the silver bullet time window. So we will enter right at the very top. In this case, if you enter on a fair value gap that is pretty high up, then you put your stop below the low of the very first candle of the three candle formation for the fair value gap. So that will be right at that low. See what happens. Okay, so we dig in. So technically the first opposing liquidity pool will be right there. So that is almost 50 points. So right from the entry right there. And right there you hit your target for 49 points. All right, so that was backtesting on 3 consecutive days. If you followed the strategy and all of the rules, you would have made gains on all of them. So that is my take on the ICT Silver Bullet strategy. And thank you for watching, and I will see you in the next one.